Hey, what's up there? This is Cody the Coin Raptor coming at you with another ARK Invest video on the Bitcoin Monthly. Now, this is for December of 2024. And in this presentation, ARK goes through, they talk about some of the more important aspects of the Bitcoin market, and I give my thoughts and my opinions on what's going on here and try to break things down in a way that makes sense. So we're going to go ahead and get right into it. And ARK's major theme for this is going to be 2025, and specifically in the short term, if Bitcoin is overheated. Okay, before we get to this, be sure to subscribe, be sure to hit that like button, and be sure to follow me on X and Threads. All right, we're going to go ahead and get right into it. So, as usual, we start with the summary. Now, they talk about the fact that Bitcoin closed above the 200-day moving average, the short-term holder cost basis, and the on-chain mean, and this would be 72,000, 87,000, and 61,000. Now, what's interesting about this is that gives us an idea of where support would be if Bitcoin were to come back down again, if it lost that $90,000 channel. And where I would look for it is about here at about 87,000 right there at the short-term holder cost basis. I'm going to show you that in the chart that they have here in a minute. They also go ahead and say that historically, all years following a halving year have delivered positive returns and bullish momentum, with the last halving occurring in 2024. Now, this shouldn't surprise anybody that understands the Bitcoin cycle, but the whole idea here is that the next year after a halving, there is significant bullish momentum and positive returns. They also point out the fact that the strong holder behavior, with 62% of Bitcoin supply not having moved in more than a year, this is really important for getting an idea of how bullish the market is for the long-term holders. Long-term holders don't tend to sell until the price gets close to the bull market top. And they also go ahead and say that because of the short liquidations in the futures market, it suggests short-term overheated conditions in the Bitcoin market. Now, this is primarily what I've been talking about. This is something we're going to cover more as we get to that slide. They also talk about the productivity driving economic growth, which is important to understand the long-term economy and the health of the economy. All right, we're going to go ahead and get right into this. So the on-chain health, this is not really that changed. We have a little bit of change here in the transaction volume and active owners. Those have both been downgraded to bearish. Other than that, not very many changes. The next page of Bitcoin metrics, perpetual futures basis got upgraded to bullish, and expirational futures basis is bullish as well. So this is mostly all bullish to neutral. All right, so going towards the short-term holder cost basis, the 200-day moving average, and the on-chain mean, these are three levels that ARK has used in order to use technical analysis to figure out where the supports are going to be and the resistance levels are going to be for the Bitcoin price action. So you can see here that the short-term holder cost basis, which is the one I mentioned, that's going to be the closest to where the current Bitcoin price is right now, close to 100K. That would put us at a support level of about 87,000. So this is a level to watch out for. I think as the month progresses on from here, we'll actually see the short-term holder cost basis probably move up into the 90s, and I think that that's going to be a prime level of support. But usually when Bitcoin kind of moves above this level and stays above this level, it indicates more bullish momentum. We saw that in all of 2024, in which it came down and it touched these levels, and then it wound up springing up much higher after it cleared all three of these levels and it pushed into 100K. That's something to watch out for. Okay, now here they point out the appreciation following a halving year, and you can notice here that there are some huge gains after a halving year. They specifically point out the fact that in 2013 it was a 54 times gain, 2017 it was a 14 times gain, and in 21 it was a 1.6 times gain for the Bitcoin price. Now you'll notice also that it tends to shrink a little bit. You don't have as much of an increase in the price as the years have ticked on. So that's kind of something that I would expect for this. 1.6 times was the last full year after the the last halving back in 2021. So this time I would probably expect anywhere between a 50% gain to maybe 100% gain, potentially speaking, for this time, because we have diminishing returns as time goes on, as the market cap of Bitcoin tends to increase and increase and increase. Now we're in the trillions. So they say here that even though this is not a guarantee of positive returns in 2025, the 4-year seasonality suggests that Bitcoin will perform well in 2025. Now, this is really important to keep your eyes on for the entirety of 2025, because we might wind up getting some serious volatility through 25. Just keep that in mind, that that's normal, and usually Bitcoin performs very well after a halving year. All right, so they also talk about the percent of Bitcoin that has not been moved, or they say this percent of Bitcoin supply that has been dormant. So you have the addresses that have Bitcoin for greater than a year at 62%. Okay, 62% of the Bitcoin supply has not moved in over a year. That's very strong. The 2 years at 53%, and the 3 years at 45%. And what's important to know about this is the fact that as the bull market gets going, we're right in the middle of the bull market, you tend to see that these amounts will decrease over time. As Bitcoin goes higher and higher and higher, these amounts will decrease as people wind up taking profits. So this is something to pay attention to, and this is something I cover usually on my weekly videos. They also talk about the fact that relative volatility points towards future market expansion, and the fact that we saw that large spike in the fourth quarter of 2024, that volatility spike is not significant compared to where it has been historically, which it surprises me a little bit, because that seems to be a large spike that I've noticed in the futures market. And ARK's coming out here and they're saying, actually, no, that wasn't really that crazy in historical context. But they also say that the data points suggest room for future market expansion towards 2025. I think that means that basically what they're saying here is that you expect there's going to be more volatility in 2025 compared to this last year that we've been through. Okay, so liquidations, they've talked about the fact that they have a large amount of the short and long liquidations, and then the dominance level between short and long liquidations. Now, according to ARK's view, the ratio of the dominance between the Bitcoin short and long liquidations would suggest that there are overheated conditions in the derivatives market right now. Now, again, this is back in December, but they're saying here in December that the Bitcoin derivatives markets were greatly overheated. We saw a large amount of liquidations during the previous month in November and December, and now they're basically saying that because of all these liquidations, now the market's kind of overheated. Now, this is back in December, but I do think that this also applies to where we are right now in January as well. So generally speaking, ARK is saying that, hey, this is a bearish indicator and the market conditions are overheated for Bitcoin, suggesting that there's going to be a pullback. And so we have actually seen that pullback in January. But that's not to say that there can't be a further pullback from here. All right. Then they also talk about the productivity, and they talk about the metals to gold ratio and the 10-year treasury yield. So these are metrics that usually follow each other, or they have followed each other for the past 20 odd years or so, the metal to gold ratio and the 10-year treasury yield. So they've split apart in like the last couple of years. And what ARK is saying here is that either you're going to wind up seeing this metals to gold ratio increase, and that would probably mean that metals are becoming more expensive compared to gold, or the price of gold is coming down, or they would say that the 10-year treasury yield has to go down from here. So it's very interesting that they point this out, because the rise of gold has been just enormous over the past couple of years, and so now they're saying that it needs to come more in line with where it has been in the past, or the 10-year treasury yield has to come down to match it. And they're saying that this is kind of neutral. All right, next they talk about the small business optimism. They're saying that this is actually bouncing back. There have been some previous ARC reports that have said that, hey, well, small businesses aren't doing very well. Now it looks like they're kind of showing more optimism in the later stages of the year here. So they're saying, measured by the National Federation of Independent Businesses, small business optimism in 24 plummeted to levels not seen since the 2008-2009 financial crisis. After the election in November, it rebounded. So they're basically saying that this was heavily influenced by the election, and so now, since we have a new regime taking place in Washington, now we're starting to see an increase in optimism stemming specifically from the election. All right. And then they also talk about the fact that productivity and real GDP growth have been kind of moving in sync. And the view for this is very bullish because they're saying that AI adoption could spur productivity and real GDP growth greater than those of the 1990s. And so that would be extremely bullish for the economy, but not just for the economy, but also for Bitcoin as well, because Bitcoin needs to have an economy that's growing and expanding, and also having real productivity as well, and GDP that's expanding as well. So this is very bullish for Bitcoin in the grand scheme of things. So I think that ARK right now has had a more bullish view, not only of the Bitcoin market in general, but also the economic factors as well, the larger macroeconomic picture. So this is something that I've noticed in the past couple of reports that they've put out, that they've been gradually more and more bullish after every report. But they did say that in short term, the market is overheated. So that's something to watch out for. Now, let me know what you guys think in the comments below. If you think the market is short-term overheated, if you think that it's likely that we're going to have more volatility this year, leave a comment below, and I'll catch you guys in the next video.